There's a powerful way to look at a market chart that most people just miss. Today, we're going to pull back the curtain on that. We're talking about cutting through all the noise, dodging those fake outs, and actually catching those big, juicy trends with a whole lot less stress. So just take a look at these two charts. Be honest. Which one would you rather trade? The one on the left, the chaotic, noisy mess that feels like you're just guessing? Or the clean, smooth trend on the right that basically spells out the market's direction for you? Yeah, I thought so. If you pick the one on the right, you are in exactly the right place because we're about to break down how to get that kind of clarity. You see, the biggest problem with the standard charts we all look at is that they're just filled with noise. They're designed to shake you out. You get these fake breakouts and these nasty whipsaws, and they're really only there to do one thing: hit your stop loss and kick you out of a good trade. We've all fallen for this whipsaw trap, right? You see the price dip, you panic, you sell, and then you just watch in agony as it shoots right back up without you. That happens when we react to all the little wiggles instead of the real trend. But what if there was a way to just filter all that noise out? Well, there is. And it's this brilliant Japanese technique called Heiken Ashi. And that literally translates to average bar. And that's exactly what it is. It's the tool that turns all that chaos into beautiful, simple clarity. Now, the magic behind Heiken Ashi is actually surprisingly simple. You see, unlike a normal candlestick that just shows you the raw open, high, low, and close, Heiken Ashi takes all that price data and averages it out. The result? You get this much smoother picture of what's really going on. It filters out all those crazy wicks and those minor reversals that trick us. Okay, so we've got our filter, but a tool is only as good as the person using it, right? So now we have to learn its language. These Heiken Ashi candles, they tell a story about a trend's momentum, and our job is to learn how to read that story. And that language, it's built from just 3 core words. First, you've got your bullish candle. That's a green body, usually with an upper wick. That's screaming buying pressure. Then the bearish candle, a red body with a lower wick, showing you strong selling pressure. And finally, the doji. That's the little guy with a small body and wicks on both sides. It's telling us the market is hitting the brakes, it's undecided. These are our fundamental building blocks. And this is where it all comes together. This is how those building blocks create a whole narrative. Look at the top, a strong uptrend. What is it? It's just a series of big green candles with no lower wicks. That is pure, unadulterated buying power. But then, look what happens. As the trend starts to get tired, the bodies get smaller and you start to see little lower wicks pop up. Then maybe you get some dojis. That's indecision. That's the turning point. From there, a strong downtrend can emerge. Big red bodies, no upper wicks. And, just like before, as that selling pressure fades, the bodies shrink and upper wicks appear. See? It's a complete story of momentum, from birth to death and back again. Now, knowing the language is one thing, but using it like a pro, well, that requires knowing what not to do. So let's cover a couple of the most common and costly traps you have to avoid. Okay, this right here is probably the most crucial distinction. On the left, you've got classic Heiken Ashi. Here's the mistake. It completely replaces the real price chart. This is a huge problem because it hides the actual market price from you, so you can't see true support and resistance levels. But on the right, that's the pro's choice, the smoothed Heiken Ashi. This genius little tool overlays the calculation right on top of the real price chart. You get the best of both worlds, that beautiful trend clarity without losing that critical price precision. And here it is, the second major trap. Because Heiken Ashi is an average, it always lags a little bit behind the real price. So what do tons of traders do? They see the indicator flip from red to green and they jump in immediately, blinded by FOMO. But look what happens. By the time that color flips, the price has often already made its big move. This is a recipe for buying at the absolute worst possible time. Remember this, a color change is just an alert. It is not an entry signal. All right, now that we know what to look for and just as importantly what to avoid, let's put it all together into a real actionable plan. This is the 4-step protocol for using Smoothed Heiken Ashi to enter trends with discipline and confidence. The protocol itself is beautifully simple and, most importantly, repeatable. We're going to walk through these 4 steps. First, identify a dominant trend. Second, spot a shift in momentum. Third, and this is key, wait for a pullback. And finally, confirm our entry. The entire goal here is to enter trends at a discount, not chase them when they're already running away. Let's see this thing in action. Step 1. Identify a strong, clear trend. Right here, we see the market is in a hardcore sell mode. Look at those big, consistent red candles. The momentum is just screaming downwards. In an environment like this, we should only be looking for a chance to sell. Next up, we spot the shift. See how those powerful red candles start to shrink? That's our first clue that the sellers are getting a little tired. And then, bam, the color flips to green. Now remember the trap. This is not our signal to buy. This is just an alert. We stop, we wait. The context of the market has changed, and now we need to be patient. Step 3 is all about that patience. We wait for the pullback. We're waiting for the actual price to come back up and meet our indicator. In this case, our Smoothed Heiken Ashi is acting like a dynamic zone of resistance. By just waiting for the price to come back to us, we're giving ourselves a chance to get back into that original downtrend at a much, much better price. We're getting in at a discount. And finally, step 4, confirmation. As the price comes up and hits that dynamic resistance zone, we're watching for proof that the original sellers are jumping back in. And here we see it perfectly. First, a rejection signal. See that long wick poking up? And then it's followed by a big, strong red candle that completely engulfs the prior one. That is our trigger. The trend is ready to resume, and that is our high probability entry. So when you put all this together, what does it really add up to? It's simple, really. Clarity equals confidence. When you can see the trend this clearly, you stop getting stressed out and reacting to every minor little wiggle, and you can finally focus on what actually matters. And this is what we're aiming for. This is the goal. A chart that looks just like this. Clean, clear, and just easy to read. You let the Heiken Ashi filter do the hard work for you, sifting through all that junk and noise so that you can focus on trading the true market intent with confidence and with discipline. So the only question left is the one right there on your screen. Are you ready to stop reacting to the noise and finally start trading the trend?